Okay, well, we've talked in our video about employee share schemes for key employees, about what you can do for your key employees, and most of what you can do for key employees you could also do for all your employees. However, there are at least a couple of arrangements specifically targeted at companies that want to create share ownership for everybody throughout the company. The first of those is something called the Share Incentive Plan, or the SIP, which brings statutory tax reliefs. The first thing an employee can do is buy shares out of their salary, and if they do that, they won't have any income tax or national insurance deducted from the salary. So in other words, they get full tax relief on any money that they decide to invest in shares in their company. There are some limits to that. Alternatively, or additionally, an employee can be granted free shares under a SIP. And the main thing to remember there is that the value of any free shares awarded to the employee is going to be free of income tax. Now, under a SIP, whether an employee buys shares with tax relief or is granted free shares, free of tax, there is one particular condition important to remember, and that's that normally the employee will have to hold on to the shares for at least 5 years. The second statutory tax relief for all employee share ownership is something called the Save As You Earn, or SAYE, option plan. Now, under that arrangement, an employee will be granted an option over a specified number of shares and will agree to save a certain amount of money each month out of their pay, which is put towards the eventual cost of exercising the option. And that will normally be over a 3-year period or sometimes a 5-year period. At the end of that period, whether it's 3 or 5 years, the employee can decide whether they want to keep the money they've saved or whether they want to use it to exercise their options. If the share value has risen over that period, then the wise thing for them to do will normally be for them to decide to exercise their options. Okay, well, your company may feel that wider share ownership for all your employees could be relatively complex, and therefore you may want to look at an alternative which is simpler. And probably the front runner is to have something called ownership by an employee trust. Now, typically what that means is that you would set up something called an employee trust, which would acquire a block of shares in the company and hold those on behalf of the employees. Now, what that means for each employee would typically be that as and when the company decides to pay out a profit share, then a percentage of that profit will be paid to the employees equal to the percentage of the company that the trust owns. Additionally, if the trust ever decided to sell its shares, then the sale proceeds would be passed over to all the employees of the company.